Hello, Trade Pros. Welcome to our evening update for today. YouTube was having some issues doing some live streams this morning, so I was going to do YouTube live, but unfortunately I had to record the screen share, so I do apologize for the inconvenience. But we are going to do a video today. I just wanted to bring you up to speed on what the Federal Reserve said. So at 2 p.m. Eastern today, what the Fed said is that they saw appreciable risk inflation to lag target, and that almost all Fed officials see inflation rising to their 2% goal. The number of Fed officials saw upside risk to growth from tax cut, and they all agreed. And here's the key statement. All Fed officials agreed that a gradual hike approach was still appropriate. Just to remind you guys, one of the things we've been, and gals, one of the things we've been forecasting from the Federal Reserve from the announcement this afternoon is whether or not they're going to get more hawkish. What does more hawkish mean? It means whether or not they're going to increase rates at a faster pace than they projected. Currently, the market's pricing in 2.76 rate hikes for 2018, which means almost 3. And the anticipation here was there any talk in the last meeting minutes in January's meeting of an increase to 3 or even 4 rates for 2018? And if that would be the scenario, then the US dollar would rally firmly and equities would have sold off. So the Federal Reserve did not allude to that. They were pretty dovish in nature, meaning that they're going to stick to their projected path. So basically, if I break down the news to you one sentence, their update was there is no update. We acknowledge that inflation is increasing in the market. We think it's going to hit our target of 2%. We're not worried. We're not doing anything different than we've communicated previously. And that tone was enough to keep the markets at bay. So despite that, however, the markets reacted as follows. The US dollar today has been pretty firm. It rallied above the 90 marker. We think below 89, the US dollar here on the right side had a lot of short sellers trapped. And you can see we ran a bear trap. What's a bear trap? We break the low, trade below that low for a couple ticks, suck in a few last short sellers, and go in there and start running stops to the upside. So we think on the US dollar here, the target's about 90.34. Above there, we're going to have some buy stops up to the 91 level. So we're continuing to expect and anticipate a strong US dollar in the next couple of days and to end this week, while we're continuing to look for downside or weakness across oil, equities, and bonds as well. Gold futures also tend to track inversely correlated to the US dollar, so keep an eye out on the dollar for the next couple sessions. If it continues to be firm and make a run towards these 91s on the US dollar index, you can expect weakness across the board from risk assets. I wanted to take you through and show you on my day trading template what the S&P 500 futures did. In our subscribers, we provided a level for them that we intended to get short off of for a swing trade basis, and that level was triggered, and the downside prevails. So let me switch here to ES1 exclamation. That's the futures here on TradingView, and I wanted to take you through on a daily session on an hour by hour. So this is a 1 hour chart. The last couple days, we've seen equity markets rally on the open only to see that rally fail and get sold off into the close. As you can see, we continue to plummet here at the 6 p.m. open and after hour session. So what does this mean? Equities or markets in general that open strong but close weak on high volume are actually bearish markets. That's how you define a bearish market. In a bullish markets or a market that's bullish, it'll open weak and close strong on increasing volume. So what you're seeing here is a continuation to the downside for the remainder of the week. Here at Trade Pro Academy, we're looking to sell rallies and we're trading. Today we traded the upside in our live trading room. Tomorrow, if this persists, we're going to be trading the downside, it appears. The next key support here on the S&P 500 futures is into the volume profile and consolidation right here. We had 2 points of control. 2650 is a massive support level, so keep an eye out on that. It's about 40 points lower. By tomorrow's close, we could very well be trading down there. So at this point, we're looking to sell rallies on equities and bring it down to the support level. Ultimately, the next support below 2650 is 2600 even. You got a naked point of control. That's what this red line suggests, which means a lot of volume was accumulated here and we haven't traded down to it yet. All right, so that's the prognosis. That's what we're looking for the next couple of days. The Federal Reserve didn't say anything groundbreaking. They pretty much kept things status quo and are going to maintain their gradual rate hike path. Let me end it off by reading a few comments from the Fed in their statement. Participants generally saw incoming information on economic activity in the labor market as consistent with continued above-trend economic growth and further strengthening in labor market conditions. All they said was the labor market here is good. Another thing they said is, even so, several participants expressed considerable uncertainty about the degree to which changes to corporate taxes would support business investment and capacity expansion. So basically what the Fed's saying is this tax plan by Donald Trump, we don't know how it's going to affect the overall economy. And they've expressed that concern in their meeting minutes. All right, another thing that we needed to note here is the following. One moment. That said, a few participants posted that the recently enacted corporate tax cuts might lead firms to cut prices in order to maintain competitive or to gain market share, which would result in the transitory drag on inflation. So they're saying the tax plan might actually result in a little bit of a drag on inflation and those targets, and that's pretty much the majority of the important things they said. Overall, several other speakers on the FOMC suggested that the upside risk to the near-term outlook for economic activity may have increased. So they're saying there is a little bit of increase in the risk or the perception of risk in the economy. Their entire meeting minutes are really long, and I will leave it to you guys to research that. If you go into Google, type in Fed minutes, you'll see the latest release, and you can comb through it. There's some very interesting perspective in those minutes. So you guys, good luck, good trading. Watch out for these equities. Keep your eye out on the US dollar, and it's going to be very indicative of the direction to which the market wants to continue. Take care. Have yourselves a great day. We'll see you tomorrow morning at 9 a.m. for another morning market update as usual, as every other weekday. Take care, Trade Pros. Thanks a bunch for being here. I really appreciate this community. I have nothing but respect for you guys, and I look forward to conquering the markets together. Please like, comment, share, subscribe. We got a lot of great content. And put down in the comment box, what do you want to learn about next? And we'll be happy to share that info with you. Take care. Have the best of days, and I'll see you tomorrow.